You see, there's low-hanging fruits. The first low-hanging fruits that I need to come and harvest are those fruits of getting contribution margin. How do I get contribution margin for each of these products? To get CM, remember, I'll have to take price minus variable cost. So then in that regard, what I would do, I hope these figures already you have them, we shall be able to remember them when we need them. What I would want to do is to come and create a row here where I get the contribution margin for each product. So come here and give me the contribution margin for each product, which is price minus variable cost. So is there somebody who is able to do that for me? So like, for example, X, I'll take 3, which is a selling price, minus 2.25. Could you kindly give me this contribution margin per unit? So the first one I'm being told by Gordon is 0.75. The second one will be 4 minus 3.5. 4 minus 3.5. What do we have here, somebody? 0.5, thank you very much. And then lastly, you have 2 minus 1.25. 2 minus 1.25, that gives me 0.75. Ladies and gentlemen, remember, if you want to get break-even point, if you can remember the concept, to get break-even point, we normally take fixed cost over CM. This is when we have, whenever we have single products. Whenever we have a single product, we shall use this formula. But if it's a composite, a compound scenario, where you've got 3 different products, like in this case here, there are many products, then automatically we must add what we call the working, WACM. So this WACM is called weighted average. It's called weighted average. It's called weighted average contribution margin. So this is weighted average contribution margin, weighted average contribution margin, weighted average contribution margin, weighted average contribution margin. So these are weighted average contribution margins. So if you can remember, like in this particular case, for us to be able to get this working, what I need to do is to take the weight of the first product times contribution margin 1, plus the weight of the second product contribution margin 2, plus the weight of the third product contribution margin 3, right? To get weighted average contribution margin, we take the individual weights times the contribution margins for each product like that. We are lucky to be having the contribution margins. What we do not have are the weights. What in this case here do we need to do to be able to get the weights? What do we need to do to be able to get the weights? What do we need to do to be able to get the weights? What do we need to do to be able to get the weights here? So how do we get the weights? Remember that weights are normally obtained out of what we call the sales mix. These sales volumes here. Yes. Total number of units, yes. Yes, the sales volume, yes. So then in that regard, ladies and gentlemen, I'll easily get, could you kindly give me the total here? What is the total volume? Is there somebody who can give me the total volume? Is there somebody who can give me the total volume? This is 4 plus 5. This is 9,000. 9,000. Great. So it means that the weight of the first product, which is X, will be 2/9. I've just chopped the 3 zeros. Weight of the first product will be this 2,000 out of 9,000, because weight must be a fraction, it must be a decimal proportion, right? And then we have weight 2. Weight for the second product again will be 2/9. 2/9. Then lastly, we have weight of the third product, which will be 5/9. Now, you guys having gotten the weights, could you kindly dribble this ball further and combine the weights with the contribution margins to give me the working? Please come and combine to give me the working here. Given this formula, is there somebody who has already gotten this working really? Is there somebody who has gotten the working? Is there somebody who has gotten the working? So Joseph is telling me 0.695, 0.695, right? Remember what I'm doing? I'm basically plugging in. I'm basically substituting here. So my working here will be equal to weight 1, which is 2/9 times contribution margin 1. Contribution margin 1 will be 0.75. plus weight 2, which is 2 over 9, times contribution margin 2, which is 0.5, plus weight 3, which is 5 over 9, times the third contribution margin here, which is 0.75. So at the end of the day, what figures are we getting? So we are getting 0.834. According to my own, the final answer is 0.834. 0.834. 0.834. 0.694444. Na nasema ukweli, my own, take up your calculator. Press there 2 over 9 times 0.75 plus 2 over 9 times 0.5 plus 5 over 9 times 0.75, right? So remember, you're not required here to round off so much. You must give us this many decimal places. The more the decimal places for working, the better for everybody. The more the decimal, just give us like even the entire figure that is in the calculator. For working, you must really be very broad. For working, you must be very broad. The bigger. So they're telling us that the answer, the exact answer is supposed to be 0.695. The exact answer of working is supposed to be 0.695. Mayom, do you have this figure now? I know the mistake that they did. Some of them try to round off this. The earlier you start rounding off, the more the chance of getting a wrong figure. That's why I maintain the fraction. When I try punching these 2 over 9 and then I start getting my decimals which are recurring, then automatically I know that that's a recipe for what here? Problems. I would rather maintain my fraction like that. So now all of us are getting this 0.695. It's not lost on us what they really want us to get. What these guys want us to get, ladies and gentlemen, is this simple thing. They want us, ladies and gentlemen, to give them X break even. And they've just said here that X break even is fixed cost of a working. What is our fixed cost amount? We have written this figure here. The fixed cost amount for the firm. The fixed cost amount for the firm. The fixed cost amount for the firm, 3250. So then this will be 3250 divided by our 0.695. So what figure are we getting here at the end of the day? What figure are we getting here at the end of the day? What figure are we getting here at the end of the day? So they're getting 4680. You can see rounding off errors in terms of working will always get problems. Working is a very sensitive. Actually, among all the things I teach, I know working is very sensitive to rounding off. Very sensitive to rounding off. Very sensitive to rounding off. Let's first of all agree about this figure. Were you getting this exact figure? Were you getting this exact figure, 0.695? Yes. So then when you take 3250 divided by this, what figure are we getting here? Somebody is saying 694, I don't know. So the students who are using this 0.695, when you divide, what figure are we getting, somebody? Okay, let me go back a little bit. To help us here, let me go back a little bit. Is there somebody who used these fractions the way they are here? What figure are you getting for working if you used the fractions? If you use the fractions, what figure are we getting for working? The full figure in your calculator. The full figure in your calculator. If you use the fractions, 0.69444, like that. So this is supposed to be 0.6944444, like that. So this is the figure that I would want you guys to use here. 0.694444, like that. Use it the way it is in the calculator. Not even 3 decimal places. If it's recurring for working, you must use that figure the way it is in the calculator. So then if you're using it the way it is in the calculator, then the final break-even point I'm being given here is 4680. Is 4680. The final figure that I'm getting there is 4680. The final figure that I'm getting here is 4680. The final figure that I'm getting here is 4680. Thank you very much. Great, 4680. Of course, you know it doesn't stop there. I still have to dribble this ball a little bit higher. For me to be able, in this case, here to take it beyond the goalkeeper, I have to take this ball a little bit higher. How do I take it a little bit higher? This is a composite figure that I've gotten. I need to break it down to the three types of products that we have. So I need to split this down. So I need to come and split this down very first. I need to come and split this down for advisor in terms of break-even point. So we have this X break-even. X break-even is 46.80. Break this down into X, Y, Z. Fortunately, we have the thing to help us break this down. We already have the proportions. If I remember well, this was 2/9. This was 2/9. This was 5/9. So then these ones, they will be able to give us what figures now. So like if it is X, it will be 46.80 times 2/9. What figure are we getting here? What figure are we getting here? 46.80 times 2/9. So the first figure is 1040. Thank you so much. Go to the second figure, 46.80 times 2/9. The second figure, 1040 again, right? 1040 again. Thank you so much. Yeah, because the proportions are the same. And then lastly, Z will end up giving me 2,600. Thank you so much. Lastly, Z will end up giving me 2,600. So these are the break-even quantities. If you want us to earn zero profits, from each of the products here, ensure that we are able to produce these figures like that. Great. Ladies and gentlemen, listen and listen to me very well. Listen and listen to me very well. Once I've gotten this break-even quantity, this guy wants us to get the break-even in form of shillings. They want us to get the break-even in form of shillings. That's quite easy. I'll just need to multiply these quantities with the prices. You multiply these quantities with the prices because we know that revenue is price times who? Times quantity. And fortunately, we have the prices here. So if it's X, I'll come and take this and multiply this with 3. I'll multiply this Y with 4. I multiply this Z with 2 like that. So if I do that, I'll be able to get the revenues from my 3 products here, X, Y, Z. So is there somebody who can give us these figures? So revenue over X, 3120, 3120, 3120. Thank you, Susan. That's the revenue of X. From there, we go to Y. So Y, what do we have? 4160, 4160. From there, we go to Z. From there, we go to Z, which is 5200, like that. So total will end up giving me what figure now? Please add the 3 now. Add the 3. If you were to add the 3, what shall you get at the end of the day? If you add the 3, what shall you end up getting at the end of the day? 12,480. You have fully answered part 1 of this question. You have fully answered part 1 of this question. That is part 1. And then now we go to part 2, which is the main aim of this particular class already. Part 2, they want us to construct a break-even chart. So how do we construct a break-even chart? How do we construct a break-even chart? Quite a simple thing. The first step of computing a break-even chart, the first thing is for you to come and give us the contribution margin. Give us the contribution margin for each product. So break-even chart. So first of all, give us the contribution margin of each product. So fortunately, we had computed this as 0.75, 0.5, and then 0.75. That's contribution margin. That is step number 1. Step number 2, give us CMR. Is there somebody who can remember how we normally compute CMR? Is there somebody who can remind ourselves here? How do we normally compute CMR? CMR is something divided by something. CMR is contribution margin ratio. It is something divided by something. It is CM over price. Yes, it is CM over price. So in that regard, this one here will be 0.75 divided by the price. The price is 3. This is 0.5 for Y divided by the price. The price here is 4. This is 0.75 divided by the corresponding price, which selling price, which is 2. So could you kindly give me these figures very fast? Is there somebody who already has them? Right? Is there somebody who already has these contribution margin ratios? Now, Mayom, we are getting contribution margin ratio. Contribution margin ratio, which is a CM over price. Contribution margin over price. So 0.25. 0.25 vis-a-vis what here, somebody? Yes. Yeah, okay. So 0.25, 0.125. And then lastly, we have 0. What here, somebody? 375. I think Livy, you wanted to write 0.375. Thank you so much. So this is contribution margin ratio. The third step, please rank them. On the basis of this CMR, come and give us the ranks. So come and rank them. So give us the ranks. So rank, so which one should we put as number one? Ranks, which one should we put as number? The higher the CMR, the better the product is. The higher the CMR, the better the product is. The higher the CMR, the better the product is. So in this case here, the one that I should give number one is Z, you're right. So this takes up number one, this takes up number two, this takes up number three. So you're ranking them. So number 1, 2, and 3 like that. Great. So after that, give us the total sales and the total contribution. Only those two things that we are left with. So come and give us here the total sales, and the total revenue. Total sales, and not revenue, but total contribution. Total contribution. So give us these things only, total sales and total contribution. So total sales revenue, how do we get sales revenue? We are aware of what is needed for us to be able to get sales revenue. We are quite aware. To get sales revenue, we normally take price times quantity. Price times quantity. So the selling price is here. The selling price is here. The quantity is here. Right? So you take the selling price times quantity. We're using the volumes given here. These are the sales volumes. You can even qualify this by calling it sales volume. Sales volume. So, right, so total sales is price times quantity. Price times quantity. So the price, I can see the price. You can write it somewhere as you're working. So it will be 3 times 2,000, which gives me 6,000, like that. How about the second one? I can see the figures here. We have 8,000 versus 10,000. 8,000 versus 10,000. Great. How about total contribution? How do we get total contribution? It is CMX. CMX. Total contribution is CMX. Total contribution is CMX. Fortunately, we have the CM and we have the quantities there. So you take the CM, multiply them with the quantities. So I'm being given here by Susan 6,000, 8,000, 10,000. Oh, no. So then I'm picking the wrong figures. Those were figures for what here? For sales. Those were figures for sales. Those are figures for sales. For total contribution, what do I have? So for total contribution, I can see 1,500. 1,500, thank you very much. And then the second one will be 1,000, I'm told. And then the last one, 3,750. The last one is 3,750. So we want to pause there for a minute and ask whether we are together. Are we together, or am I the only one in this case here who is doing a tough winger, a tough wing on the other side from number 7? I'm running much faster, leaving you guys behind. So most of them are saying yes, 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 yes. So then from there, we shall come and give our examiner the CVP schedule, the multiple product CVP schedule, multiple product CVP schedule. So we start with the products here. Then we have the total sales. Then we have the total contribution. And then the last one is the profit. Please draw something like this. Contribution, to get contribution, I'm sorry, I've rubbed my figures, but to get contribution, we took contribution margin as price minus variable cost. Right? So we got contribution margin, for example, if the selling price is 10, variable cost, for example, is 4, so the contribution margin will be 10 minus 4, which is 6. And then now to get the total, we took the 6 here times the number of units, because to get that contribution, we take contribution margin times number of units, times number of units, times number of units. Great. So ladies and gentlemen, from there, what do? Now come and give us the product. You start with the best ranked. So the best ranked is which one here? It is Z. So we produce Z only. Z only. We start with the best ranked. 1500. According to Sasiet, anasema kwamba hii contribution is wrong. Please, could somebody try to help us here? Are these contributions correct? Are these contributions correct? Because if the contribution margin here is 0.5, and then we know that the quantity is 2,000. Sasiet, how do you get 7,500 here? Right? If contribution for each unit is 0.5, and you have the quantities, I can even repeat them here. The quantities here we are 2,000. This also helps this student who was asking about how we got the figures, 5,000. Really, taking this will give me this figure, I can see. 0.5 times 2,000 will give me 1,000. 0.75 times 5,000 will give me 3,750. Which figures were you using to get that 7,500 really? Right? So these are correct figures. Great. So we start in this case here by producing Z only. So if we produce Z only, what will be our total sales? The best ranked product, if it is produced only, it will give us 10,000 Kenya shillings. If we produce Z only, the total contribution that we shall get from Z only is 3,750. Right? Total contribution is 3,750. So the total contribution is 3,750. Now, if you're going to produce just Z only, who can talk to me this afternoon regarding the profit that I'm going to generate given these metrics here? If you're producing Z only, how much profit shall we post as an organization? How much profit shall we post as an organization? Thank you so much, Robert Mwangi. Robert ameniambia kitu ya maana sana, ameniambia mwalimu, mimi najua kutafuta profit. Atukwamba mimi najua profit is CMX minus fixed cost. In short, profit is total contribution minus the firm's fixed cost. So then in this particular case, the first working year, the first profit here, it will be total contribution, which is 37. It's 3750, sorry. It is 3750 minus the firm's fixed cost. The firm's fixed cost, yes, I'm wrong there. The firm's fixed cost is 3250, isn't it? The firm's fixed cost is 3250. The firm's fixed cost is 3250. So you subtract, was Susan correct? Was Susan correct? Was Susan correct? With 500. That the profit here is 500. Yes. Thank you very much. So this is 500. Now that is the first arrangement. Remember, I'm following the ranking. So the second possibility is for us to come and produce. Of course, the first has to be in the equation. We produce Z with the second ranked product. We produce Z with the second ranked product. So Z with the second ranked product, the second ranked product here is X. So we produce Z and X. We produce Z and X. You start with the best ranked alone. Second scenario, you take best ranked with second ranked. Third scenario, best ranked, second ranked, and third ranked, etc. So now, ladies and gentlemen, if you're to produce Z and X, what total sales will we generate as an organization? What total sales will we generate as an organization, ladies and gentlemen, if we were to produce the two of them? Thank you so much. It's only about adding them up. So remember, it is Z and X. So total sales will be 6,000 plus 10,000. So that gives me 16,000. Thank you so much. Now, what if we talk of producing Z and X? How much contribution shall we realize from both products? So go to the total contributions and combine the two. Z and X, combine the two, add the two. Z and X, add the two together. So Susan is giving me, Eric is giving me 5250. Frida, I've also seen your figure, 5250. Thank you very much. Ladies and gentlemen, after that, I would want you guys to go ahead and really give me the profit now to be generated. We know how profit is calculated. We know how profit is calculated. This is the thing. To get profit, second profit, I'll take total contribution, which is 5250 minus the fixed cost is ever fixed. The fixed cost is ever fixed. Fixed cost, which is 3250. This doesn't keep on hovering around. It doesn't wobble, right? It is ever constant. So when you subtract like that, how much profit are we getting? Somebody is telling me that we're getting a profit of 2,000. Now, from there, we shall come and produce the best ranked, followed by the second best product, and of course, the third now. The third in this case here, which is Y. The third, which is Y. If we do this abracadabra and produce these three products, how much shall we earn in the form of total sales? In form of total sales, how much shall we earn in form of total sales? So I'm being told here total sales from the three will be 24,000. Thank you so much. How about the total contribution to be realized from the three products being sold? Total contribution from the three, please add them up. What are we getting there? Total contribution, I'm being given a figure of 6250. A figure of 6250. And then, of course, to be able to get the third profit, we know what is to be done. The third profit, I will take the 6250 and then I subtract the 250 like that. So what figure are we getting here as our profit? 3,000. 3,000. Thank you so much. 3,000. Now, ladies and gentlemen, after I do that, we know that there is one scenario that so many students forget. This scenario of nothing. What if in this case here we don't produce any product? If we produce none, this is a point which is normally forgotten by many students. If we produce none, how much will we get as sales? Now, unless you're a thief, if you produce none, sales will be zero. If you produce none, contribution will be zero. However, profit has to be there because of what? Fixed cost. Profit must be there because of fixed cost. So to get our profit, remember we take contribution minus fixed cost. Jemima there is asking which question are we doing? Is it possible for somebody to take a screenshot of that question you're doing and then you post it on WhatsApp? You post on WhatsApp. So contribution here will be zero, but fixed cost will be there to bite you. So this becomes minus 3250 like that. So that is the schedule, the multiple product CVP production schedule, the production schedule. Once I finish that, now I'll be able to draw the graph. Now you draw the graph very easily. You draw the graph very easily, but I would want you guys to take a minute and draw because you guys are experts now. So in this case here, the graph, the multiple product graph. So the graph, so please take like 3 minutes and draw that graph for us very first. Yeah. So I've given you some time. You also try to put your thought processes in order. So we have on this axis, what shall we be having on this? It shall be profit. And then we have this other axis. We have our sales. So total sales, I'm going all the way up to 24,000. Right, so I can talk of sales in terms of thousands. And then if I do, in this case here, two units, I'll go all the way up to 24 with 12 boxes. So I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Right, and then I have the profit. I can see 500, 3,000 positive, 500 will do. So 1, 2, 3, 4, 5, 6 to go to 3,000. 1, 2, 3, 4, 5, 6. I have to add another one there. So 500, 1,000. We have 1,500, 2,000, 2,500, 3,000. Minus 500 minus 1,000, minus 1,500 minus 2,000, minus 2,500 minus 3,000, and then we have minus 3,500 like that. Great. And then now you shall be able to post. Yep. We shall be able to post. No, you know, it's a profit curve. Would prefer the profit being where? Being on the x-axis. Would prefer the profit being on the x-axis. My own. Please change very fast. Change very fast. So we have the first point. See, this column is irrelevant. Even now, this other column is irrelevant. It is this one here that we're plotting on the y and this one on the x like that. So when profit is 500, we can see that the y is 10,000. The y is 10,000. I've not even done mine. 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24. 24. Right. So in this case here, when profit is 500, we have x is 10. You put a mark there. And then you pick the second point. When y is 2,000 here, you can see that x is 16,000. X is 16,000. You guys will be able to draw a very good, better graph than mine, I know. From there, we have 3,000 for y here, vis-a-vis 24,000 at the very corner. Like that. And then the last one, we have minus 3,250, just to be somewhere here. Minus 3,250 vis-a-vis what here on the y, minus 3,250 vis-a-vis 0, the same point actually here. Right? And then now you take a ruler, you join the first and the last using a ruler. Straight line. Using a straight line, you join the first and the last point. And then using freehand, you join these other points. Using freehand, you join the other points like that. Mine, of course, will not look so nice. Mine will not look so nice. Mine can't look so nice. Mine can't look so nice. Have you finished, guys? You know, guys, I suppose female and a male. Have we finished? In this case here, drawing? Of course, yours will look much better. Have we finished drawing? Yes. So I would want you guys to read for me the figure that you're getting here. On this straight line, what figure are you getting there? What figure on the straight line? Mine is about 10, which is so wrong, you know, because I don't have, in this case here, scaled graph paper. So Susan says about 11. $13. I'm waiting for like 3 people to confirm what they're getting there. I'm waiting like for 3 people to confirm for me. What are they getting there? What are they getting there? 12,500, 12,400. Eric, sijaona umepata ngapi Eric? 11,000, sasa 13,000. Sasa please zingine mnakubali baba anawatukana kidogo. Because kuna kitu niliwaambia hata katika video zile uko nazo. Kuna kitu nilikuambia. Nikakwambia sababu kuchora sio rahisi, unajua hii point mahali ambapo inaguza hii x axis lazima ikuwe exactly equal na break even sales, break even point sales. So ile table tulikuwa tumefanya ya kwanza kabisa, tulipata break even point in Kenya shillings ilikuwa ngapi? 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 Ilikuwa 12,480. So this is a number you come under and ensure you cheat. You write here 12. Make a 12 point something. You make sure that this one is exactly 12,480, like that. It can't be. You're trying to cheat the examiner that you are what? You're very accurate, right? And you could see that there are students who got 12,500, 12,400. Those are the students in this case here who are what here, who are correct. So for you, even take this notch higher. So you will tell the examiner, that you got 12.48 because these figures are in terms of thousands. That's how you cheat the examiner. You got 12.48 as that intersection. That intersection must be 12 point, must be exactly equal to the break-even point. Must exactly be equal to the break-even point. Must exactly be equal to the break-even point. Great. Kwa exams ungepata hiyo ama ungekosea? Kwa exam ungepata hii ama ungekosea jameni? Kwa exam ungepata ama ungekosea? We shall cheat, yes. Yes. At times cheating is good. Yes. 100% max tungepata. 100%. Maybe you must be a very good student of this paper. Ungepata yote, that is it. And then now remember, there is this one here from your past paper for 2 products. I was marking that paper. Very few students in this case here were able to draw that CVP chart. Very few students. Is there somebody who can pick that question very fast from your revision kits? Is there somebody who can pick that question very fast from your revision kits? It must be there. I can leave you guys to go and look at it later. Please ensure that, yes, it is here. It is here. It is here. But chances are most of you will not be having this question. It's December 2013 question 2. December 2013 question 2. Yes, it's December 2013 question number 2. It's cheating in a good way, remember. This is cheating in a good way. It's allowed. It's allowed. So December 2013 question number 2. Is there somebody who will be having that question paper to send it to us very fast? Anybody will be having that paper to send it to us very fast? Nicole Chepkemoi. Nicole, you have a very good name. Shared. So please don't ignore this. Ensure that you are able to do the whole question. And I've already given you the solution in this particular book. I've given you the solution in this particular book. Perhaps what we could do for this class is just to mention a little bit. We are told Bob Limited manufactures 2 products, namely A and B. The following budget has been prepared for the year ending 30th June 2014. So you have product A, product B, total given them. Additional information, the selling price per unit of product A and B is 5 and 10 respectively. The variable cost per unit of A and B is 4 and 3. Draw a multiple product CVP chart and estimate the break-even point in shillings. Page number 58. So they want me part B to compute the break-even point in total in units and shillings for each of the products. Bob Limited proposes to change the sales mix of the products in units to 1-to-1 for products A and B. Advise the company on whether the proposed change is desirable. December 2013, question number 2. For the CVP chart. Oh, now we have done it in class, Helen Hamala. You've done it in class. Now you are good, better. You're even now better placed. Now you've done it live here. Great. Okay, you guys focus. We are doing this thing here. Focus here. Focus now here. We are in this. Ukiza kutapatapa namna hii utajiconfuse bure. Mwalimu knows what he's doing. Hii ndio mnatapatapa na kwa messages zenu kwa WhatsApp. You follow what I'm doing. You'll never go wrong. Now see what Mayom is asking. How did I get the intersection? We said Mayom. Remember that 12 for 80 Mayom is what we got as sales break even. Do you remember that figure? Do you remember that figure? 12 for 80 Mayom. So the 12 for 80 that we got there, we divided by 1,000 shillings because of our graph. And we said we shall cheat that this line is cutting the x-axis at 12.48. We say 12.48. We said we are lying there. We are cheating there. Right? Great. Now, ladies and gentlemen, look at this particular question very fast. So if I'm the one doing this question, I will start with part B, where they want me to give them the break-even point. Mayom is saying it is less than that. Now, Mayom, I can't help. Now, we don't want to zero in that. There are so many low-hanging fruits that Mayom, I saw you understanding up here, right? So many low-hanging fruits. We can't dwell on that, really. All right? I saw you understood so many things up here, right? After all, how many Kenyans do you think will be able to reach this point here, including yourselves? Remember that time you were sweating? You were sweating in the exam room. The moment you are able, as a gentleman, to appreciate the low-hanging fruits, but here I'm getting contribution margin, I'm getting CMRs, I'm ranking, you'll end up now getting like 10 over 12. You don't have to go to the very end, because if you try also going to the very end, you'll spend more than 40 minutes in that question, right? For me, I'll always go harvesting the low-hanging fruits, and you can never go wrong. So if you allow me very fast in this question, I would want to compute the break-even point. So then how do we get a break-even point? How do we get a break-even point? We have got two products here. We have products A and B. A and B. Are you able to see the selling price? Are you able to see the selling price? So I would want to move very fast, so long as you'll be able to follow, right? But again, if you feel that I'm moving very fast, please stop me. I don't want to move very fast because the steps are the same. So from note number 2, are you able to see, no, note 1, additional information 1. Additional information 1, are you able to see, in this case here, the selling price? Yes. Note 1, the selling price is 5 and 10, right? Variable cost for A, note 2, we can see 4 and 3. So when I see selling price and I see variable cost, what should come to my mind very fast? What should come to my mind very fast? Even if I don't know what is being asked, contribution margin, thank you very much. So give us contribution margin, which is price minus variable cost. So then subtract this, right? So what figures do we have here, somebody? If you subtract, so this 5 minus 4, this is 1, this 10 minus 3, which gives me 7 like that. Great. So 1 and 7. So having gotten this, the next thing that I will think about very fast here is the sales units. I'll think about the quantity for purposes of what you're getting the weights. So quantity, please here don't use sales in Kenya shillings to get the weights, no. So the quantity given here, ladies and gentlemen, the quantity for product A is 120,000. The quantity is 120,000. The quantity for B is 40,000. So total, wamesema ni 160,000. So from this quantity, I should be able to get the weights. The weights. Abracadabra, this will be 120 over 160. This will be 40 over 160. I think you guys are not able to see even what I'm writing. So I got in this case here the quantity total there, which I'm now using to get my fractions. Right? Lenovo is saying that my internet has an issue. But are you able to hear what I'm talking about? Are you able to hear what I'm talking about? Great. So then here, at least hizi zile madecimal hizi ni safi. Hizi ni safi kabisa 0.75 na ingine inakuja ngapi somebody? 0.25. Thank you so much. Thank you so much. Now, you geniuses, I know you guys are very bright, only that you are panicking. Having gotten the weights, having gotten the CM, what do you think will be the next thing that I should do? What do you think should be the next thing that I should do? Wakim, yes. Give us Wakim, yes. So go ahead and give us Wakim. So to get Wakim, Helen, to get Wakim, you take weight 1, contribution margin 1, weight 2, contribution margin 2. To get Wakim, Alfred, are you able to give me the figure of Wakim? Now I have to target each one of you. Alfred, I want you to give me the figure of Wakim. Alfred, if you have a calculator, and if you don't have, just tell us you don't have. If please you have a calculator, could you kindly give me the figure of Wakim for me to know whether you guys are following? And then we have Frida Kendi, my friend. Please give me the figure of Wakim. You're too silent today. Even Fatima today, what is not happening? The higher you go, the cooler it becomes. Lakini mliambia Fatima ni wawili, mliambianga Fatima ni wawili, kuna Fatima moja anaongeanga sana. Helen is giving me a different figure from what Frida is giving me. Between the two is wrong. Frida, you are wrong. Because I can see 2.5 zimekuja kwa fujo. Sasa, weight 1, mmesema ni 0.75 times contribution margin 1. Contribution margin 1 mkono hapa 1. Plus 0.25 times contribution margin 2, which is 7. Of which I'm being given here Kendi, at the answer ni 2.5. Please confirm Kendi kama 2.5. Maybe ulikosea tu figure. Punch kwa calculator namna hii, please confirm kama 2.5. Thank you very much. So now here we are. Tunacheza mpira. Sasa hii mpira mimi nairusha kwa Anna Amondi. Anna Amondi, niambie next step ni gani? Na usiniambie utapiga mpira ujifunge kwa goli yenu. Next step ni gani Anna Amondi? Hapo tumeshapata Wakim. Amana kurusha mpira unachanganyikiwa namna hii. Tukishapata Wakim, what do you think Anna Mondi will be the next step? Gordon Ware, are you Anna Mondi? Oh, my screen is growing small because of the internet. Because of the internet. Thanks, Alfred, for speaking. Thanks, Alfred, for speaking. Break-even point, yes. Thank you very much. So could you then kindly give me the break-even point here? So how do we get the break-even point? It is fixed cost over Wakim. Fixed cost over Wakim. Fixed cost over Wakim. Has this examiner given me the fixed cost? Has this examiner given me the fixed cost? Has the examiner given me the fixed cost? From the table given there, the fixed cost is 300,000. Thank you very much. So this will be 300,000 divided by Wakim that you guys had given me as 2.5. So this is X break even. So X break even mnapata ngapi sasa? X break even 120,000. 120,000. Thank you so much. X break even is 120,000. I'm told that my screen now is disappearing, but fortunately, again, I'm realizing this is a class that most of you are following so keenly and so seriously. Then we should be praying for internet to be having issues. Right. Thank you so much. So, ladies and gentlemen, we've been able to get X break even. When you read the question, what do you think in this case here should be the next thing to be done, Mr. Joseph? Mr. Joseph, when you read the question, question two, what do you think in this case should be the next thing to be done? They have already told us we should split, yes. Once you get, this is the composite compound quantity. So go ahead and split. So now we are splitting this 120,000. Could you kindly split this into products A and B and tell me A, how many units are we producing? Eric Odinga already has got figures. Eric Odinga has got figures. Eric Odinga has got figures. Yes. He's telling me that, Mwalimu, you know what? We have the criteria of splitting this to A to B. we know that we have the decimals here, we have the fractions here, the weights. So like for A, then I'll take 0.75 times 120,000, which gives me 90,000. For B, I'll take 0.25 times 120,000, which gives me what figure somewhere here, 30,000. Because the two must add up to what here? The two must add up to, thank you so much. So they have told you to calculate the break-even point for each product in units. And then number two, break-even point of each product in Kenya shillings. So in Kenya shillings, what do? We translate this to money. Get sales revenue. We translate this to money. We translate this to money. So translate this to money. We translate this to money by multiplying it with what you're selling, the price. So come and multiply this. So in this particular case, ladies and gentlemen, sales revenue, you'll forgive me, my board is quite disorganized. Sales revenue. Oh yeah. If it is A, I will take 90,000 times the selling price, which is 5. If it's B, I will take, ladies and gentlemen, 30,000 times 4. So in this case here, what do we have? So A, what do we have? Eric Kodinga gives me for 50,000. And then B, what do we have at the end of the day? 300,000. So total, itakuja 750,000. Total gives us 750,000. And if there is anybody I feel I have now lost on the way, it's my own Anijong. You're not participating in this question the way you participated in the other one. This one I've lost you, my own. Are we together really? Are we together? The other person who is not speaking at all is my friend Lillian Kadima. I've not seen you giving me any figure, right? Yeah, I suspected. So then take a minute to catch up. Really, it's the same thing. It is the same thing. It is the same thing. Same thing that we did. Actually, the other one was 3-product case, and you followed very well. Great, go on. Thank you very much. Now, ladies and gentlemen, we have answered now part 2 of the question. In part 1, they want us to give them the break-even chart dash multiple products. Kale kalaini kangu kale ndachora, kale ambao tutachora hapa. Figure gani nitaweka hapa? Kwa unafuata. Kale kalaini nitachora, figure gani nitaweka hapa? 750,000 years. 750,000 years. Great. This is the figure that I will play around with. Yes. And you know, here I've always seen students who are very, very bright. I've seen students who are very bright. They know that sometimes some of these examiners don't even look at what happens. So if they're not able to draw at all, you just get a student who comes and puts there 750, 700. Here we have 800. And then he puts funny things and then he draws a graph like this. And you know, this guy may end up getting all the marks. But instead of leaving a question blank, right? Instead of leaving a question blank, you are better off doing something like this. How do you leave a question blank and then you start telling us irrelevant things there? This is much better. I've known that this thing will cut at 750. So guess figures there. Hapa mwandikie profit. Kwanza hapo unakuja unaandika hapa in capital letters. In capital letters pako na double line. Unasema the graph. Kupata hakuna kitu umefikiria. Kutoka hapo grace ya Mungu ikipita juu, grace ya Mungu ikipita unapata mark yote. Without much. What we don't want are students, in this case, who are leaving these things blank. Now, ladies and gentlemen, listen here. So then we go to the multiple product CVP chart. So multiple product CVP chart, what will be the very first thing that we should compute here? The very first thing that we should be computing gani? We remember those steps. God will understand, yes. So if you remember these steps, CM, isn't it? So we start with CM, yes. So A, B. So CM already we got this, 1, 7. And then step number 2, CMR. So come and give us CMR. Do you remember the formula of getting CMR? It is contribution margin over price, isn't it? It's contribution margin over price, right? So like now, this one here will be 1 over the selling price, that is 5. This will be 7 over the selling price, which is 10. So could you kindly give me these decimals? I think this should be 0.2. You are not wrong. I think the first one should be 0.2. 0.2. All right. Yes. And then we have this one here, 0.7. Thank you very much. I'm under your control. After CMR, what should be the next thing to be done? Rank. Cheers. Rank. Cheers. So come here and rank for us. Come here and rank for us. So this one here gives us number 1. This gives us number 2. So after ranking, is that everything? We do that particular schedule, isn't it? You can even call it a production. Before that, they've been now telling me, Mwalimu, you're moving very fast. There is something you're missing out. Give us the total sales. Give us the total contribution. You guys are bright. So come and give us here the total sales. Give us the total sales. So total sales is price times quantity. Price times quantity. So fortunately, we have the selling price here, and the quantities were somewhere here. So selling price and the quantity, you multiply. Selling price and the quantity. So what we have here, somebody for A. For 50 and 300, no. Those are the break even. We don't work with those quantities, remember. We don't work. Thank you very much for bringing up that concept. Here, we don't work with those quantities really. We don't work with those quantities really. Here, we're working with these quantities given in the question here, the one for getting the weights. So this one here will be 600,000. Vis-a-vis what here, somebody? 400,000. Thank you so much. Great. Now, after that, we have total contribution, isn't it? So now we have total contribution. Total contribution, remember, I will take the contribution margin that I have here times the number of units. Total contribution, I will take the contribution margin that I have times number of units. Is there somebody who has these figures already? Is there somebody who has the total contribution figures? I know where my contribution margin is. This is what we had obtained. So it will be this times this. So the first one, I'm able to see total contribution of 120,000. The second will be 200, what here, somebody? 280,000, like that. Thank you so much. Now, after that, I'm at home. Now the chickens have come. Now mine is to slaughter them, right? Mine is to slaughter them. Mine is to slaughter them. So now we should be able to give them what we call a production schedule. A production schedule. So now we should be able to get a production schedule. So a production schedule, we have in this case here products, total sales, total contribution, and then profit, just like that. Very easy like that. I love it when it's a 2-product case. I love it when it's a 2-product case. So products, could you kindly give me the first scenario? What should I write up there very first? So remember products, what am I producing? The very first scenario, I should start with the very best product being produced alone. B alone, isn't it? So you say B only, the best ranked. So B only. So if we produce B only, then what will be the total sales? If you're producing B only, what will be the total sales? If you're producing B only, what will be the total sales? If I'm producing B only, the total sales is given here, 400,000, 400,000. If I'm producing B only, what will be the total contribution? If I'm producing B only, the total contribution will be given by this, 280,000. And then we can bet with you. I'm so sure there is nobody who will be able to give me the profit, correct profit here. Nobody. That one you can bet. Is there anybody who wants to bet with me? Yeah. I would have lost the bet. I would have lost the bet. It's good we never entered into any bet. Great. So, then, gentlemen, in this case here, we have total profit. Profit is contribution minus fixed cost. Profit is contribution minus fixed cost. So contribution here is 280,000. Fixed cost is given in the question as 300,000, which I'm being told will give us minus 20,000. Thank you so much. So could you then kindly look at the other two scenarios in a minute so that we can also get time to organize our thought processes. Please go to the second scenario and third scenario and even fourth scenario, if there is any fourth scenario. So have they finished? Have they finished? Let's compare notes here. So B only, I can see students discussing there. B only, that is okay, minus 20,000. And then now we have here B and A. What are the arguments I wanted you guys to make? So we have now B and A, the best ranked and the second best ranked. If we produce these two together, then the total sales for sure will be what here? It will be the two added together. Total sales will be 1 million. Right? And then we have B and A's total contribution will be 120 plus 280. That gives me how much here? 400,000. 400,000. And then, of course, for sure, we know that profit will be this 400,000 minus fixed cost of 300,000. So then that gives us a profit of 100,000, which you guys got. But there is one that so many students will forget. There is one that so many students will forget. Too bad. I will be addressing this thing with Safaricom on Tuesday. Perhaps they should be able to give us more bandwidth, but we should be able to finish our class, right? So we have in this case here none. None. So you produce none, this will be 0, right? Total contribution will be what here? Somebody, nothing contributed. And then this one here will be 0 minus the 300 minus 300,000 minus 300,000. So were you guys able to give me a freeze, eh? Or the video imehang. Video imehang. Whoop, disaster. Oh, is it? It's back. Okay. Thank you. Great. But were you able to get these figures? Were you able to get these figures, somebody? Were you able to get these figures here, somebody? Yes. So please go ahead and then draw the graph. Go ahead and draw the graph. Go ahead and draw the graph. Go ahead and draw the graph. So drawing the graph. So we have our profit here. I can see the negative is the one that is bigger. The negative is the one that is bigger. The negative is the one that is bigger. And then we have our sales here, total sales here. So sales, I can see up to 1 million. So I've got no problem with this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I can do 100, 200, 300, 400, 500, 600, 700, 800, 900, 1,000. So these sales in terms of what here? Thousands. And then go straight away to the profit. Go straight away to the profit. So profit, really here the best will also to go the 100. So profit in shillings, thousands. So this will be 100. Minus 100, minus 200, minus 300, like that. Right? So we start with the first one. So the first point is minus 20. So minus 20 will be around here. Please try to estimate very well. So minus 20 is the profit vis-a-vis the total sales of 400. So minus 20 vis-a-vis 400, that will be somewhere here. Put a mark there. Right? And then we have the next one, which is a profit over 100, this 100, vis-a-vis what here, 1 million, total sales, vis-a-vis 1 million, 1,000 there, put a mark there. And then lastly, we have minus 300, which is this one, vis-a-vis 0. So it has to be right there. And then it will come, ladies and gentlemen, and the peak. You will come, ladies and gentlemen, and the peak this. The 2 points end to end with a ruler, kanisha. Unamdanganya ile 750, mdanganya. Lakini yako bila kudanganya imeingiana kule kwa 750, hiyo straight line. bila kudanganya. Kuna mwenye yake imeingiana kwa 750 bila kudanganya, bila kudanganya. Kuna mwenye yake imeingiana kwa 750 bila kudanganya. Your straight line. Please be very honest. Please be very honest. Yake imeingia kwa 750 exactly bila kudanganya. Kwa 750 exactly bila kudanganya. Yangu mimi nimedanganya. Yeah. And then now you have this other line, which preferably should be dotted, going through this other point, like that. And now you have finished that question. Eric anasema kabisa ndani yake imeingia kwa 750. Yake hajadanganya. Yake hajadanganya. Yake hajadanganya. Yake hajadanganya at all. Yake hajadanganya at all. Yake hajadanganya at all. So thank you so much. Thank you so much. So can we go to part, this part C is also a common one in your exam. Part C is a common one in your exam. Can we go to part C? Can we go to part C? Can we go to part C? Yeah. So part C, Bob Limited proposes to change the sales mix of the product in units to 1:1. My internet is very unstable today. It's giving me a warning. We shall correct this. We shall correct this. We shall correct this. So we are told there, Bob Limited proposes to change the sales mix of the products in units to 1:1 for A and B. Advise the company on whether the proposed change is desirable. 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 This is very easy question, very easy question, very easy question, very easy question. So remember that with the current sales mix, they already have a profit. With the current sales mix, they have a profit of how much? 100,000. If you're able to see the table given there, from the current, ladies and gentlemen, profitability analysis, is there somebody who's able to see a profit of 100,000? Yes, it's part of the syllabus, yes. It's part of the syllabus. Does it look very hard, Frida? Not Frida, but who asked this? Jemima. Do they look very difficult? Is it something you can understand? You will be able to understand this. It's very easy. Yeah, so profit there is 100,000. So what if, in this case, ladies and gentlemen, we were to change? Erika amekataa internet hii imeleta shida. We are overcoming. Are you able to hear mwalimu? Are you able to see mwalimu? I'm an international disaster. Are you able to see mwalimu? I'm an international disaster. Imehang, okay? Tungoja kidogo. We give it time. We give it time. Let's give it time. Let's give it time. Is it coming back? Amemekataa. So are we back really, or international disaster? Yeah, I'll address this. Are we back? Are we now back? At least, okay. Sorry, hii itakuwa imeisha. Hii by Monday itakuwa imeisha, but I think ni Safaricom amereduce. Hatukuwa na shida. Safaricom amereduce bundles zao. So we have here, total sales is 160,000. Where am I getting these total sales units? I'm getting the total sales units, ladies and gentlemen, from, I'm getting the total sales units here from this table given. They told me number of units here are 120 for A, and then B is 40,000. So this total sales, if you add 120 plus 40, that gives us 160,000. So they want us to redistribute this to A and B using the new sales, 1:1. So 1:1 means what here? 50-50, 50%, 50%. 1:1 is 50%, 50%. Imekataa tena. So meaning that this will be 80,000, this will be 80,000, like that. So could you kindly give me the contribution margin? Are you able to remember the contribution margin for A? Contribution margin for A ilikuwa inakuja ngapi? Abracadabra. Contribution margin hapa ilikuwa inakuja 1 na ya B ilikuwa inakuja 7, isn't it? Right? So could you kindly give me the total contribution? Kindly give me the total contribution. Total contribution is CMX. Total contribution is CMX. You are taking the contribution margin times number of units. So kichukua ina hii inakuja 80,000. How about this and this? Can somebody give me this times this? 80,000 times 7 gives me 500 and who? 80,000 times 7 gives me 500. We shall overcome. Baki na step moja tumalize. Sijui itakubali tutoke hapo nitafute mashine nyingine. So 80,000 times 7 gives me what figure? 80,000 times 7 gives me what figure? 560,000. Great. So the total here, 80 plus 560 gives me what total? The total 80 plus 560,000 gives me what total? 80 plus 560,000 gives me what total? So this will be 640. Less fixed costs. 300,000. So this is the net profit. From the start, so remember here, they've told us that we are changing what here? Our sales mix. They've told us that we are changing our sales mix to 1:1. So what I did, first of all, I combined all the products together. A is 120,000, B is 40,000. So if I add the two, I'll end up getting 160,000, which now I redistribute using 1:1 ratio. 1:1 means what here? Equal. So 50%, 50%. So 50% of this gave me 80,000, 80,000. The contribution margins will not change. The contribution margins will not change. Those ones will remain the same. Contribution margin for A is 1, for B is 7. So I was able to get the total contribution by taking this times contribution margin. This gave me 560. So then I came and added the two, which gave me 640,000. And then I shall come and subtract what here? Our fixed cost. Fixed cost of how much here? Somebody? 300,000. So I was able to arrive at a new net profit of 340,000. So if you compare this 340 with the 100 we were getting last time, Are we better off or worse off? Are we better off or worse off? Better off. So in this case, then we recommend a change in the sales mix. Bye-bye. Let's talk about another class now. But I believe you have at least gotten a few things here and there. So don't even ask for a recording. It will not be there. It will not be there, and that recording will not be there. Internet imetusumbua. Thank you so much. Bye-bye. Yeah, given the circumstances.